Hello, Jim here. We had a rough Friday. The market was down quite a bit due to tariffs with China and the government shutdown, both of which are still lingering. I think it can potentially be some pretty major headwinds. We might have a fairly rough week or potential month in the markets. So today I want to talk about my playbook, what I do during these times, especially if there's a good chance for a crash on the horizon. So I'm going to talk about the steps I take to kind of secure my accounts and the things I try to avoid. So stay tuned. I think it's going to be well worth your while. Okay, let's go ahead and jump right in. I did set up a outline just to keep me focused. Now, why do I think the risk of a major downturn has gone up dramatically over the last couple of days? It's primarily the big deal is the tariffs with China. I do think they're testing us. The fact that we're going through a government shutdown, I believe she decided to kind of test the waters, see what would happen. They kind of turned things around on us, and now Trump is issued 100% tariffs on them starting November 1st. And that definitely put the market in a tailspin on Friday. But then this shutdown, the longer it goes on, the bigger an issue it is. On the 15th, I believe a lot of people would end up getting paid. Trump has said he will try to find a way to pay the military, which I think is really critical. But it doesn't look like they're going to come to an agreement anytime soon. This is the first time in a long time, if ever, that, a clean continuing resolution wasn't agreed to. Typically they are agreed to, and then they get into the real negotiations. So the fact that this happened with a clean continuing resolution is I don't know, a real negative in my mind. If this goes on another week or two, it's going to get towards the end of October, middle to late October. And then I believe the continuing resolution was only to fund the government through November 21st. So we'll be really close to November at that point. So they would almost not, it wouldn't make sense necessarily to continue work on that same continuing resolution. It's almost like they'd have to put together another one and try to pass that, or to potentially move on and, set up the negotiations for all the different pieces that need to be negotiated. I'm not so sure that they're going to come to an agreement. Will they maybe use the nuclear option? I mean, Trump and the Republicans, and allow a 50-52 vote to be able to pass the resolution. Or to the future bill, if it's not this resolution, maybe it's something else they end up passing. There's been a real reluctance to do that, but if it means getting the government running again, I think that they probably should take that step and potentially, go ahead if it's just on the Republican side that they push it through. Because I'm not so sure the Democrats are going to want to negotiate. A lot of the specifics that they want is they want the freedom of the blue states to be able to provide the SNAP programs and a lot of the other programs for people who are legal. And I don't think the Republicans are going to agree to that. So I don't know. Maybe I'm completely wrong and some kind of deal will occur in the next couple of days. That would be really nice. But I'm not thinking that will happen, especially with Trump mentioning he's going to find a way to pay the military. And in this AI, I believe the AI bubble, it's a true bubble. It reminds me so much of back in 98, 99 with the dot-com bubble. The fact that companies are investing in each other and these prices are going sky high. I just think it's gone a little bit too far or gotten a bit ahead of itself. And I think we're going to potentially, that bubble may pop too. So all these things coming together at once is definitely a big concern that we might have a significant crash. Will it look like what happened in April? Well, it might. I believe actually the downturn started before that. I believe it started in January and finished in April. Could it look like 22? It might. Could it be much worse than 22? Who knows? My hope is we have a bit of, maybe a slightly big correction, not slightly big, not the best words, but maybe a 5 or 10% correction, and then people come to their senses and we can make a deal and move forward and the market kind of recovers. I do think long term the market's going to do well. A lot of these stocks and ETFs that I've been investing in and most people have been investing in long term will do well. So that's the main issue or concern I have. It's a lot of headwinds. They're all coming at the same time, and I would not be surprised, like I said before, that we get a significant crash. Next, I want to talk about what kind of trading adjustments I'm going to make, what I'm going to be changing in my account going forward, at least until this government shutdown stops. So stay tuned. Let's jump into that next section. Okay, my adjustments I'm going to make. First thing I've already started, I started it a couple of weeks ago, is holding a lot more cash. I have probably 35% of cash in both my IRA and my Roth. Roth may be closer to 50% in cash. And I encourage you too, if you've got some dogs you're thinking about getting rid of by the end of the year, well, it might be a good time to go ahead and get out of those in the next week or two. Also, if you have some companies or ETFs that shot through the roof, like a Palantir that has such a huge PE. I mean, I think their PE is close to 300. Even AMD or some of the other stocks that have shot up so much, or like a NVIDIA, there's a whole list of companies that are just, in my mind, could potentially be very overvalued. And if we do get a crash, they may fall a lot more than some of the other companies that aren't so overvalued. So you might want to trim them a bit. You might want to take a bit of profits, up that cash, just in case we do get a significant crash. Now, I like to buy long puts. It gives me downside protection, but also gives you the ability to, it gives you more choices. So if the market does go against you, you can roll the vertical put credit spread into a cash secured put. So if you do that, you're selling the short. I don't know, you're buying the short, you're selling the long, and then you're selling a new short. And I've found in the past that you can potentially take a strike down quite a bit. I did that with AMD when AMD hit its lows back in April. I also did it with Dell. So I might look at doing it with a couple of other companies. And even if I want to keep the shares, if I own those long puts and the market is, come down quite a bit, selling those long puts and putting them towards the purchase of the shares or the assignment of the shares, it'll allow you to lower your cost basis. So I just think it's a good time for that. So in cases where you can do a spread, if you're just going to do a cash secured put, you might want to go ahead and buy those long puts. And I always tell my members, look at the price of those long puts. And in some cases, they may be dirt cheap and it's well worth buying them. Next is reducing trade frequency. So it's less about trade frequency. It's more about turning over your account more. So having less positions open at any time. So if you typically have 10 spreads open, maybe only during this time period, maybe only have 5, but turn them over more. So if you're able to close them because they're profitable, to give you for instance, say on one contract, you make $100, but you can close it for 30, and that's typically what you did. You were happy with a 70% profit. Well, maybe up that, maybe close it if you have to pay $40 or even $50 and go ahead and get out of that position. Another one is using a lower delta. So if you're used to using a 20 delta for your puts, lower it to 15. Back in 2022, when we went through a rough time with the market, I originally was doing 20 deltas for my puts, and I lowered that to 15, and it made a huge world of difference. It actually helped me quite a bit in April when we hit the bottom of the market. So if you're really risk averse, maybe use a 10 delta. I know of people who that's all they use for their puts and calls. They don't make as much money, but they're like 95, 100%, nearly 100% successful with those trades. So just something else to think about. Being more selective, so only trading names I'm willing to own. And I do this by default, but when you go through a correction, there may be certain instances maybe you don't want to own that stock anymore. Like a great example is I own Target, or I have a vertical put credit spread, both on Target and UPS. So maybe I'd rather have Target than UPS. I also have a vertical put credit spread on not GP, what is it? Procter and Gamble, PG. And maybe I'd rather have them than Target. So, you can almost set up a criteria and measure which stocks or ETFs you'd rather own versus ones maybe you just want to roll them and buy yourself more time. And I did this back in April and it worked out really well. And I also did it back in 2022. How I'm managing risk with real examples. I will share with you a couple of examples and what that looks like and what the exit logic would look like. So stay tuned. Let's jump in. I'll share with you both my planning worksheet. This is what I released to my membership. I actually released it earlier today. I talked about my positions that were in the money, how I was going to manage them. I also talked about the economy and the market. So I use this planning worksheet to kind of measure how I'm doing against my goals, and then also to make these kind of plans. So let's jump into that next, and I'll go into a little bit of detail about that. Okay, here's my planning worksheet. This is the one for October. I list all my trades. When I provide it to my membership, I just tell them, delete my trades, put your trades in there. So these are all the different positions I have. It's 4 different accounts. I have a Fidelity IRA account, a Fidelity Roth, a Schwab Broker 1, and a Schwab Broker 2. I color code them, so anything I closed is in blue. If I roll it, it's in gray. I also have what I call radar. This was a suggestion from one of the members, but it shows if the position is in the money. So UPS, I was just talking about that. It's one I'm going to manage. American Airlines, what's unique about American Airlines, even though it's in the money, is it's a wheel trade. So I'm going to wheel it. If it gets assigned to me, I don't really care. I'm going to probably sell a covered call on it fairly quickly. So I'm less worried about it. It's right now, I think, 1152. You can see the current prices over here on the right. I also have Intel. Now, this is a covered call. Now, one of the beauties, if you go through a correction, is a lot of the positions, your covered calls, if they were deep in the money, well, that kind of writes itself. And that's what happened in April. A lot of my deep in the money covered calls suddenly weren't deep in the money, and I was able to close them. So if we do get a crash and the market goes south, be sure to look at your covered calls. Can you close them? Can you potentially roll them? So if the market drops big time, you can close your current position, usually really cheap, and roll it up and out to a different date and time, and typically a much higher strike. So be sure not to ignore your covered calls. Others that are in the money is ITB. So this is the housing market. It's the construction part of the housing market. And it's currently 99.84. So it's a little bit in the money. The short is 103. The long is 95, so it's about $3 in the money. Now, I have talked about this before, and it's worked out really well. Worked out in April, worked out in 2022. I looked at everything that was assigned to me. If it wasn't more than 10% in the money, the chance of it being assigned to me was pretty slim. So I'm less worried about ITB at $3 in the money. If the market goes the other way or keeps getting deeper, I'd get more concerned probably when it got to around 90, 91, something along those lines. And here you can see PG, Procter and Gamble. I own 200 shares of Procter and Gamble, owned them for many, many years. I would not mind owning more. They're currently 149.59, so they're barely in the money. So this is another one I would look at. These two expire in 1024. But like I said, I'm perfectly fine with owning them. So this is where I start setting the criteria, which ones I want, which ones I don't want. I definitely want PG. ITB, I do like it. It has most of the construction companies. But in the past, even when I've had to roll a lot of these ETFs, I've had very few assigned to me. Now, if I scroll down, the green are just new trades. So these are new trades of my My raw, some of these, like this U trade, is another wheel trade, so I'm a little less worried about it. And I'd really want to own some YOU, which is a security company. I forget the actual name of the company, but they're projecting to triple, quadruple their earnings over the next 5, 6 years. Cart is another one. It's another wheel trade. So I put different emphasis on wheel trades versus vertical put credit spreads, especially if it's a very expensive stock. ODD is another one that I like. It's True AI, and it's dropped all the way to 50. So this is when I would be concerned it could be assigned to me. But it has really good call premium too. So if it does get assigned to me, that's fine. This is another one. I might even play with this one at the very end of the video. I'll just show you what it looks like if you roll this position from a vertical put credit spread to a cash secured put, how you're able to really bring it down quite a bit. And the nature of rolling is also will limit or reduce the chance of being assigned early. So, just by rolling itself, you'll have positions that won't be assigned. A lot of the brokerages and the OCC, they base assignment on either first in, first out, or random, but it seems to me it's more first in, first out. So by just rolling, you're able to postpone or avoid early assignment. Not always. I've had some get assigned to me, but overall, 95% of the time I've been able to avoid early assignment. So that's enough about this sheet. I also measure my goals. So like I've had a great start to October, almost at 4,000, and we're I think we still have 3 more weeks of October. So my goal is 8,000. I'm halfway there, so I can definitely do fewer trades. I can close some that are, maybe not, they haven't met the profit target that I want. I typically like to close at 70 or 80%. Some of these I might close at a lower profit. One an example is AMD. I still have AMD, which is a vertical credit spread at 135. I think it's 90% profitable, but it's still like $80 per contract to close, but I may go ahead and close that to free up those resources. So next, let's jump into just a quick example of what it looks like to roll from a vertical put credit spread to a cash secured put. So let's jump in and look at that now. Okay, I've opened up my trader page within Schwab, and this is what it looks like to roll a vertical put credit spread into a cash secured put. You could start by just rolling your vertical put credit spread and then deleting the new long put that you were potentially going to purchase. So what happens is I would have to buy to close the current one, which these are my actual trades. So I'd have to buy to close the 85 put, I'd pay 274, but then I could sell to close the 80 put, which is the protection that I purchased for $44. Now, if I went out to November 7th, I could sell the 82 and I would pick up 335 for that. And then I'd end up earning $1.05 to $1.52. I'd probably start with this $1.52 and then, work my way down. So I probably would do this as like $1.50. And then I would then see I'd have 2 contracts, so I could literally pick up $300 in this trade for 2 trades. It's a thinner spread than I typically have, 85.80, but again, picking up some pretty good premium. So I'd pick up around, if I did $1.50, my cost basis would be right around 80.50, something along those lines. And then I would review the order, I'd place the order. And if it didn't go through, I might lower it by a couple more dollars. Next time I might do 148 or 145 and then review again, place the order. But the fact that you're, selling to close the existing position and then selling to close a new position, you can potentially roll it quite a bit down. I could even go farther down. I could say, well, I want to go all the way to 80 and I'm still bringing in some cash, not as much. But lowering it all the way to 80, it's currently at 82. But this is one way I found to get to, to get some positions out of harm's way. Sometimes you can roll completely, so I'll try rolling, I can always add back in the leg. And, I might be able to just roll it and just slightly widen the spread and also lower the short a little bit. Or I'll just buy myself more time. I'll roll it to the same strikes as a vertical put credit spread if I'm fairly happy with the price, but I don't want everything being assigned at the same time because of the market crash. So this is what I wanted to share with you guys. This is what I typically do. I did this a lot in April. I also, had instances where if it was assigned, then I'd be left with just the long put, and then I would sell the long put, and I'd put this cash I'd pick up, this $88, towards the cost basis on my shares. So, and this also worked out. I did this with probably 4, 5, 6, 7 positions. And like I said, it worked out fairly well. I made it through April. And then my big deal wasn't owning these shares. It was I did covered calls all above the cost basis. But a number of the companies I did it on shot through the roof as well. Some ETFs like XLK. So let me know what you think. What would you suggest for people? What kind of things are you doing to protect yourself with a potential market downturn or crash coming up in the next couple of weeks? So please leave a comment. I like to typically respond to the comments within 24 to 48 hours. And I just wanted to get this out on Sunday night. I was hoping to get this out at 4, but ran into some plumbing issues at my house here. So, sorry it's a little bit late, but I definitely wanted to get it out Sunday evening so people were aware of just some strategies and things they can do to help them. So as always, thank you for taking the time to watch the video, and I hope you have a wonderful rest of your evening.